What in the world is happening right now in the world of crypto? What in the world is happening right now in the world of crypto, you guys? I'm looking at the market and I'm seeing bubbles, bubbles, bubbles. I'm seeing a lot of red bubbles, you guys. Today was supposed to be a good day. Today was supposed to be a October. October has just been like a wild ride. Like October for the world of crypto has just been a wild ride right now. Right now we're seeing down, 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 right? The market's down everywhere. Red, 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 right? Like I don't understand that. When we go to what's actually happening though, a lot of the news are positive, you guys. Breaking news, China courts now allows ownership of Bitcoin and crypto. Adoption by China, good for crypto, right? Donald Trump recently said this. He talked about why in the world did the United States government sell their Bitcoin. And he talks about never sell your crypto, which is very bullish. We know this just happened, right? China is now going to buy 180 tons worth of US soybeans, right? This was something Trump was talking about previously. So the market still isn't reacting in the best way. Let's take a look at price of our cryptos right now. Geez, Bitcoin's going down a little bit, you guys. Ethereum at 9,800. It's holding. ETH is actually holding pretty good. ETH is holding pretty good, right? I consider this, I'm gonna let you guys know right now. I consider this potentially a good buy the dip opportunity. I consider this potentially a good buy the dip opportunity. Not a sell. How's ETH doing right now? I wish ETH went down a little bit lower. I wish Ethereum went down a little bit lower. We're looking at XRP. XRP, it's in the cuffs. It's in the cuffs of running a little bit high. We'll see how that reacts. So you guys, I'm on live right now just because we have the FOMC meeting happening shortly here. So we're going to see what Jerome Powell says, right? So there's two huge things affecting the crypto market. Rather, prices are going to go up and prices are going to go down. Number one is this, right? The Federal Reserve. Oh my goodness. They already cut rates. Rate cuts are in 0.25% as we knew it. But I really want to hear what he says. Mr. Amran. What's up, my brother? I know you've been on my live stream before. I am here. Oh, what's up, Josh? I see you. I see you, Josh. You are here. Josh. You showed up. So I'm excited to see what this man says. It starts at 2:30, you guys. What time is it right now? We got 4 minutes left. 4 minutes left. All right. This is what we have to see to really see the market pump. What's up, Itachi? How you doing, my brother? Hope you're doing blessed, man. So we're going to see how it reacts, you guys. We have a few more minutes. In about 3 minutes, he's about to go live. Jerome Powell, the man himself. He's like, bro, this man is like Thanos. Like he snaps his finger, the market crashes, right? What's going on? All right, so I'll explain what's going on. So today we have Jerome Powell, who's the head of the Federal Reserve, speaking. This is very important. We've been waiting for this day forever, right? He is now going to speak. And when he speaks, he's going to talk to us about interest rates. He's going to say pretty much, we are hoping that he insinuates that rates are going to get cut again in December, and they're going to introduce more liquidity in the market, and that they lean more towards quantitative easing. But the market is going down. I know the market is going down, bro. That's part of the game, brother. That's part of the game. You can't make money if it doesn't go down, right? It goes down, you buy the dip, and then it goes back up. So we're going to see what happens. Like when this man speaks, you either see the market boop or you see the market boom. Like we're going to see what happens. This is very important. When this man speaks, we listen. So we got 3 more minutes till the meeting starts. And we're going to see what he says. 12:26 my time. What country are you in? He said 12:26 my time. What country are you in? Nana said, "Good afternoon, good evening. We meet again." All nations. Bro, he already cut the rates by. Yeah, we know he cut the rates. Yeah, we know he cut the rates. We know he cut the rates. What's important is what he says. What does he say? That's why it airs. Look at this. That's why we have look at it. We have 30,000 people right now here waiting to listen to this man speak right now. Right. So we knew the rate cut was happening because it was like 97% chance. But we want to hear what he says because that makes the difference. All right. So some of the things we want to hear, like we don't want him to hear things like, hey, we want to cut rates as slowly as possible. Like we want to hear things like, if the economy is leaning towards us implementing. Okay, this is ideally what we want. Number one, we want to end of quantitative tightening. That's what we want. So that's the first thing we want. Boom. Right? After we end quantitative tightening, we want to see quantitative easing occur. Once we see those two things occur, then we're going to see our stinking crypto boom, 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 up, up, and away. Right? So that's what we want to see. So we're going to see when this man starts speaking, we're going to see how the market reacts. And even though the market is going down right now, let's switch to the hour. It's already recovering. Like when I look at the hour right here, you guys can see we're recovering. Green so far. Things are looking good. If we look a little bit closer, we look a little bit closer. Look at Bitcoin just because Bitcoin controls the market. Gold is skyrocketing, right? Like that's what we don't want. We don't want gold going up because as gold continues to go up. Okay. Oh, look at this little bad boy right here. I like that. I like that. Bomb, reject, come back down. Hopefully this happens with gold, right? We see it break down, run up, get rejected, and then continue to come even lower here. Hopefully this happens. This will be really, really good for our crypto. This will be really good. Test set to the moon. Let's go, let's go, let's go. So, oh, it's about to start, you guys. Hang on. Hang on. Where is it? Am I playing it? Oh, he is. He's out. He's here, you guys. He's here, you guys. Can you guys hear the screen? Can you guys hear what he's saying? So, wow. Raise it a bit. Oh, raise the volume up a bit. Okay. Is that better? Naywood. Is that better, bro? Someone said, is this my real account? Yeah, this is my real account. I don't have any other account. I only have one account, which is this one. So be careful of all these scammers who try to message you pretending to be me. Yep. Hmm.
Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories,
Are we looking good,
consumer
boys?
prices
We're still green. We're
rose
still green.
2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of
Never
containment
trade during news. You're right, Itachi.
over the
Thank
course
you
of the
so much
year
for the heart,
about tariffs
Ray. I
and
appreciate
budgeted
that.
both
Thank you.
market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.75 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation.
Get rid of these tariffs,
The
bro.
base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure
Yeah, there was.
increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We
Yeah,
continue to face two-sided
you're
risks.
right, right?
In the committee
You are right.
discussions at this meeting, there were strongly differing views about how to proceed in December.
Oh, here it is, December.
Reduction in the policy rate at the
December.
December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities such as currency keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in treasury bills, furthering progress toward a portfolio consisting primarily of treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay.
Nick Timrose, the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion in your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were
Ooh.
strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I just...
Colleagues framed last month, maybe today, I won't put words in your mouth, as a risk management exercise. At what point
That was so annoying. I
conclude
can't believe he said that.
insurance? Are you looking for some kind of improvement in the outlook, or could
All right, real quick. We're going to listen to this. And then after, I'm going to kind of give a summary for people who don't understand everything that's happening, okay? I'm going to make notes, and after, I'll break it down.
I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw, particularly after we saw the July meeting, we saw downward revisions in job creation. We saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a, I would say, modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
The market isn't...
Financial Times. Thank you for taking this question. We've just heard from the
Oh my gosh. Market's going down.
discussion in December, and the conclusion of the discussion is not a foregone conclusion.
So,
I'd like
just
to
a,
just dig into that a little bit more.
So just quick for those of you who don't know, they asked him about December, like what's going to happen December based on how the conversation was going on today. Are you guys looking like, hey, are you guys going to be cutting rates in December? And he pretty much said, hey, internally, like we're split in between. There's a lot of people who feel like we shouldn't, and there's some people who feel like we should. So the market is looking at that and it doesn't like that. Hence why we're looking at crypto right now. And you're seeing Bitcoin at 109K because everyone's expecting when December comes, we're going to cut rates. Well, we cut November and then we cut again in December. But it's leaning more towards like uncertainty or even a pause, which absolutely sucks.
Forecasts, right? So
Which absolutely sucks. Hence why we're seeing the market now react and Bitcoin's back at 109. When we were just at stinking 115. Crazy. And combine that with some people getting liquidated as well. All right, let's go back to what he says, you guys, because this is important.
And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say I think it's a fact that we don't make decisions. But this is, I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up with QT? How much of the fund impressions we've seen in money markets related to the US Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice. And so there's not a lot of benefit to be holding on to get the last few dollars because, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-hand effects from tariffs?
Yeah, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, and we do have, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market. And the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have.
I can't believe this man just said that.
I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we picked that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's like 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views? Was this a close call, this cut, or was it a close call into the other way? You had dissent on both sides. Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecast for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
Just to follow up on the balance sheet, if you stop the runoff now, does that mean you have to go back to actually adding assets sometime next year so that
will foster both a more treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start grow. You want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think we'll notice it in market conditions, but that's the direction of things.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs, and that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news, the housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that just you kept expecting it to do that. Now it's been doing that for some time. We expect to continue that. That leaves the biggest category is services other than housing services, and that's kind of been moving sideways over the last few months. But a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, and people have different estimates of what that is, but it might be 5 or 6 tenths. And so that if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. Um, uh, so that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which we can have something else inflation. One of those would be a really tight labor market. We don't see that. I know there could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's.
So this whole tariff situation is like, oh my gosh, like a double-edged sword. Like, so Trump ideally wants like originally he's like, I want to implement tariffs to get rid of federal income tax, and we make the money through that. So then he's implemented these tariffs on all these other countries, but the thing is, tariff isn't helping the economy. Like in regards to like inflation, like it's not good. So he's trying to do this to try to push the Federal Reserve to try to drop rates, but the Federal Reserve is like, no, we're not gonna do that. So kind of like this little back and forth ping pong game between them and Trump.
The non-market part of it should come down. It largely reflects higher stock prices and I mean, financial services.
But like if Trump were like, let's just say Trump's like, all right, no more tariff, like let's forget about it. That would typically be really good for the market.
Restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy.
Well, the whole tariff thing is a huge like
Is because
um is like a bargaining tip, right? For him to get a better deal, right? Hence why he tariffed what's it called? China. Right. And when he said that, it made the market crash.
or market pricing, you will see
But definitely could definitely be used as that as well, Itachi.
there should be no question that that's where we're going.
Great, thank you. Chris Rugaber, Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom.
Oh, you guys, I'm gonna have to get going around 3 o'clock. So that's in 6 minutes. But I'll give you guys a summary of everything he said so far, my understanding of it, just to help everybody moving forward. And then very interesting to see how the market reacts tonight. Because what's gonna happen tonight that's important is that tonight the Asian market opens up. And what you realize with crypto, once you start analyzing the market really well, the big moves will happen during the New York, when the New York session opens up, when the Asian session opens up, and then you got your London session, right? Like those, like they're the three big boys that really move the crypto market. So if you are gonna like watch this, see the rest of it, because I'm gonna have to get going in like 5 minutes, because I pretty much see what he's saying, and I have another meeting. um, Look this evening to see how the Asian market reacts with crypto. So hopefully it's more bullish because I know Japan, they're implementing quantitative easing already. Uh, and so that's good for the market. We know that China is doing this. You guys, China just released this, right? Look at this. Breaking news, China courts now allows ownership of Bitcoin. So we're seeing adoption happen from institutional level. Sorry, court now allows ownerships of Bitcoin. So we don't know if it's institution or retail. I'm assuming this is retail. This is just retail, right? This is retail. And the other thing I don't like about this is I just Asian market opens at 2 a.m. or 6 p.m. What? It depends what time zone you're in, right? So, okay, so view it like this. This is the easiest way. When we go to bed, the Asian market's open, European market's open. When we wake up, their market is closed, and then we have the New York Stock Exchange. But typically, there's also pre-market, right? You have to realize pre-market. But typically, between that evening time, like that's 7, 8, 9 p.m., you'll start seeing the market react because there's pre-market.
Howard Schneider with Reuters, thank you. I just wanted you to elaborate
Oh, geez.
a moment ago.
All right, guys.
Continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things.
Bro, open up the government.
May come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up, in the debate on this
Yeah, yeah, he's right. November, the government has to open up.
wondering if that
Okay, so what he just said, I feel like I'm playing translator right now. Okay, so because the government is shut down, there's certain data that the government gets, right? Government workers, employees, blah, blah, blah. The Federal Reserve, Jerome Powell, him and the boys, the crew, these dudes, the chairmen, the whatever the elected Fed board, they then look at those data to see, okay, well, how is unemployment rate? How are the price of good? How is inflation? How is PPI? How is core CPI? How is blah 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 blah. They look at all this data and they're like, okay, based on how things are going right now, we should increase interest rates. When you increase interest rates, you get rid of liquidity, you take it out of the market, which isn't good for our cryptos and stocks. It makes prices of that go down. But on the inverse of that, it makes gold go up. So if you're someone who wants to play both sides to make money when price goes up and down, look at buying some gold, right? You can check out to buy a little bit of gold. Where the heck is gold? Right? You can buy some gold. I think it's always good to have a little bit of gold. Now, if they were to get this data and be like, oh, everything's going like, we're looking at unemployment rates, we're looking at price of goods, like we need to start putting more liquidity in the market. We need to start buying back these treasuries. We need to give the banks more money. We need, I'm Canadian. I'm Canadian too, Kyle. I'm Canadian too. So then what that will do is that will pump the market and make prices of everything go up higher.
Anecdotal data on that, and so we think there's something there. So
Yes, this is my only account, Tara.
Thank you. Edward Lawrence with Fox Business.
This is my only account. I do not have another account, so please, please, you guys watch out for scammers who message you, who try to ask you guys for money pretending to be me. It's not me. This is my only account. I will never message you guys asking you, please give me money. Give me money. I'll help you with this. Da, 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 da.
It's not a foregone conclusion. What other things could be the concern then?
well, perspectives of people on the committee that we've now moved 150 basis points,
Oh.
and we're down into you're into that range between 3 and 4, where most estimates of many estimates of the neutral rate live in that 3 to 4% area. You're above the median for the committee, but I think there are people on the committee who
So you guys, we're seeing the market pretty much move. Market moved down. There was a little bit of liquidation. We saw prices drop all the way down to that 109, but it's pretty much fluctuating between that 109, 110. Oh, you guys don't even see it. Hang on. All right, there we go. So you guys, Bitcoin's pretty much fluctuating between that 109, 110 price range. You guys can see right now. I'm looking at the market as a whole. We're red, right? Like I said, we turned red because the things he was saying, like he's saying, oh, we're gonna. The one thing I really didn't like, he said, we're pretty much split in the middle. It seems like half of everybody wants to drop rates, and then the other half might not want to drop it. So I just sent a message so I know I have the real one. Someone messaged me today. Yeah, there's probably a scammer, Tara. It's not me. Smart, sending me the real message. I'll respond to you. Say, hey, it's the real one, just so you know. So we're seeing the market crash because he said a few things. Number one, he said that we might have to slow down if the government continues to say shut down because we need the data to let us know how the economy is doing. Valid point, 100% agree. We need the government to open up to get accurate data. And he said, number two, he said that the board themselves, they're kind of split in the middle, right? It seems like some people want to cut rates and some people don't want to cut rates. He never said cut rates, but you can just tell because he can't say that, guys. No, we have to read between the lines. So then, right, that uncertainty, the market doesn't like that because what we were hoping is that they would cut and cut rates again, right? So unfortunately, the market doesn't like it, and now we're seeing prices go red, red, red. So, so yeah, we're not. So we'll see. We'll see how the market continues to react this evening. Keep a close eye on it. If anything happens, I'll just make a post on my account. Might do a video on my YouTube, along from video breaking everything down. We might see a 10% dip. No, 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 no. No way. We won't see that. Bitcoin will not drop. Solana will, I mean, Bitcoin will not drop 10% in like today. Oh, in alts. Oh yeah, in our alts. Alts can drop anything. There's alts that drop like 80%, right? So if you look in the past 24 hours, we're down 3, we're down 4. Certain alts, the alts being down 10, what's down 10? That's a lot. I don't see any alts that's down 10 right now. Yeah. But if BTC takes a big sell-off, that goes down to 105, then yeah, we'll see our alts take that type of a hit, Itachi. But you guys, I gotta get going. I have another meeting starting up. I'm already late. That meeting's at 3. It's already 3:04. Any crypto questions, send me a DM. But yeah, the market didn't react positively. I'll be doing TA on this tomorrow morning. I'll be on tomorrow morning, 7 a.m. Eastern Standard Time. Did he mention? That's a good question. No, he did not mention quantitative easing. He mentioned freezing the stinking balance book. I mean, yeah, he mentioned freezing the balance books. Like, I was hoping he would mention it. But he didn't mention it. You're welcome. You're welcome. All right, you guys, have a good one. Much love. Appreciate y'all. DM me if you have any crypto questions. If you need crypto help, check the link in the bio for the free crypto.